You're listening to financialradio.co.uk. My name's Giles McMullen, chatting to Bill Rook from Redmayne Bentley. Hello, Bill.
Hi.
We're going to be looking at Desire Petroleum. Or I might say not aptly named Desire Petroleum.
Well, it is if you're a trader.
Right. Okay. Well, talk us through it because the price collapsed yesterday, didn't it?
Yeah. Well, I'm taking a sort of a yearly view. Look back at January time, where we got a buy signal back in early January last year. And we've got about 10 trades in and out, and that's with commissions. It's expensive, but how does that tally up to that of buy hold? And that's actually put at the top of the chart there. It's sort of a red and black line thing at the top there.
Yes, I can see
and
that.
I can tell you, extract that. I can tell you that if you'd actually held on to the stock, you'd be about 6% up buy hold, and trading the stock, you'd be 31% up, net of all costs and all trades. And that's the difference between sort of a trading mentality and a buy-hold mentality.
Right.
Quite
a vast difference.
Well, there is a vast difference because you've got to actually sit out when it's not right, and that's very hard to do in the media. Sort of prompting one to think about or speculate of how much you might gain if oil is found in the Falkland Islands, how much what it could do to the desired petroleum price and its peers down there. So it's very difficult to sort of step away from that. But if you just follow a 60-day high rule and a stop, which I've put on the chart there, as the blue arrow is the 60-day high and the stop is the little circle blob there, you'd certainly be doing okay on a 1 year, one and a bit years time zone, so trading pattern. Over a longer period, it depends obviously how the thing performs. And I think you'd still be up on this particular example because of the volatility involved. And it does depend on the underlying share you choose and the time frame. But overall, this is the challenge, and it's very difficult to get this right. But we wouldn't be in that stock yesterday with that collapse of the share price. The volume at the bottom of the dials there doesn't actually give you a huge clue as to what's going on. A lot of volatility there, and the second chart from the bottom there is the short-term volume. Yes, the volume levels were going up, but it wasn't matched by the share price striking new highs. The fourth window up from the bottom there is the stock against the sector, and that started going easier. It wasn't performing well from about mid-February, 26th of February onwards. It started faltering against the sector, a sector trend. So you could argue that you would be not in this stock because of those factors. But the main one I would say is a stop loss that would have kicked in early February, would have got you out at about the pound level, although it wasn't looking too good then, because it did actually rally up to 130, nearly hit a new high, but you wouldn't be in that share, and you'd be about 31% up after all trading costs.
Would you be in it today? I mean,
this is the other thing, you see, is how do you trade that? I mean, it's speculative money, again, it's the other part successful traders do, is not put all their money in one basket, is to actually say, well, is it worth putting a small amount of money in there? For speculative purposes, possibly, or pick another one in the area which hasn't fared so badly. But I would certainly think about it, but not. I would probably wait for a new high, perhaps, or a well and truly oversold signal.
Yes, I mean, because you've got to wonder if people were buying it 2 days ago for £1. I mean,
yes.
Does it necessarily follow that it's got to be cheap at 35p?
Well, that's exactly. But the news flow wasn't that inspiring, and this is the problem. It's a news-driven stock at the moment, and the news is bad. So, and if the news improves, I suppose if a move above 60 pence would be encouraging to see. I mean, that would be if it started breaking above the high levels of the recent low, if you see what I mean. So if it dropped at about the price, if you see the chart, there's about where the red arrow is on the right-hand side there, it's about 60 odd. If it closes and started moving above that level, then it might be interesting. But speculative only, it doesn't do much for me, but Giles, really. So I mean, I prefer to see something like one of the other charts we'll look at later.
Okay, well, we're going to look at Russia now, JP Morgan Russian chart that you've got here. This looks, I mean, from the end of last year, March, April, May last year, now it's been going
it's been brilliant. Well, it all happened in July 2006-ish, down that end, around £2.20 odd. And that's why then, because where the vertical line there, because it started outperforming the market. And that's simply, all you're doing is buying momentum, Giles. So you have to know what's in there, what it does. You buy then, and when it's sort of giving the secrets away here, aren't I? Sort of July sort of September 2008, it starts going badly against the market at £4. Doubled your money, please get out. Mind the gap. That's
simple as that.
Not much more to it, really. If you want to, we'll, of course, throw lots of runes and spin yarns about the oil price and the resources and the banking sector and how it looks quite good against the debt ratios look quite good. It does actually. They all look quite good, those factors. They're all factors that would drive the price of the Russian market higher, and certainly it's coming into favour from the recent banking problems it's had. It's coming out smelling roses at the moment, so it's looking good at the moment. It's a recent buy. About the £5 level, it's 20% up since then. It's still a runner, even with the explosions yesterday that rocked the city there. So it's still looking very, very strong and worthy of consideration. The probably buying a bad day syndrome, I think this one. The green at the bottom there suggests there's volume going in here, and that's a very, very good sign. So this one looks set to run, looks good as resource stories still run.
Okay, Bill, thank you very much for that. Okay, the next one we're going to have a look at is, it's been a sort of a favourite of yours on and off for quite a long time, Aquarius Platinum.
Aquarius Platinum's good. It's sort of, again, the left-hand chart looks very, very good. About this, it started outperforming in September 2007. At about a couple of pounds, and it's moved up, and it came into a sell zone at about the £4. Very similar to the Russian story there. If you just had left it alone to do what it wants to do, it's coming into vogue again now, Josh. Not quite as strong as I'd like it to be, but it's moving into strength now against the backdrop of a stronger platinum price. And this is the driving driver behind all this is the platinum price, and that is going up mainly because of investment and also the need for catalytic converters. And lastly, jewellery. Those three factors are all going to be quite big in driving the platinum prices high. And this one is going to stand as a main beneficiary for upside. So I think this is very, very good, especially with the car production as it's going very, very well in China and Brazil. So and with the catalytic converters coming into play, platinum will be wanted along with palladium. So this is very, very good for this company. So expect further upside and wait for outperformance. So it's on the cusp of being a buy here.
Okay, Bill. And finally, Centum in Egypt.
Yeah, Centum in Egypt has produced its first ton of gold now, Centum, and it's doing very well. The share price hasn't been spectacular. It's a different chart pattern here. You can see that I've drawn a red line across the top of the chart here where the highs are. We need to break that 131. And that will give us an opportunity to buy on a breakout. The green blocks and buys at the bottom there are opportunities to buy on oversold days. So it's not very high from the oversold days. The trend is still up. The inverse Fisher transform of the RSI is positive. The relative strength isn't as high, and I quite like it. The volume levels are okay. Moving by 131 would be very good, and expect from there an upside of 180 plus. So watch this one very closely.
Bill, thank you very much for all those picks.
Pleasure.
We will chat to you again next week.
Thank you, Josh.